recording, and then we'll get started with everything in here. So let me share my screen, and then let me know if you guys can see it, and I'll take it from there. Okay, so first and foremost, right before we get started with actual charts, we're gonna go with total one. Just want to go over that real quick. Again, I'm not joking when I said the market. That there's been, if you've not looked at the markets for the last couple of weeks, you'd have been completely fine in my opinion, right? You just had to have your hard stop losses set. You're good. Total one still sat at the same place. Nothing's happening. This is extremely low volatility, right? Very low volatility. As long as 2021 12-month seller zone mid is support, we're good. But now what we're doing is that strength we were showing before, right? The attempt to close above. If you look at the monthly, for example, we know that blue line's representing an area where above that there have been no monthly candle closes in terms of buyers. Sellers have been in complete control above that basically in the past, right? We're still below that again, so it's just literally no man's land if you're looking at it in a local scale, right? It's like as long as this zone is support, there's arguments to be made why we can go higher, right? But as long as you're below this now, you're in a lower time frame range, and if you start closing below this, then once again, you deviate. And then if you start getting actual rejections from this, then we're not going to be surprised if we drop down towards our next yearly level, which is all the way down at 2.19 trillion, right? So if this holds again, there's always room for upside. If this holds, you have 1.13 that could potentially, if take you up towards the 886 should you ever get back above 3.01 trillion again, and then we can reassess. Okay, do we go and put a lower high in? Do we do another like blow off top, distribute, so on and so forth? Like we can reassess, right? Maybe you go and put a 1.13 in. That would still be a valid shot, right? A 1.13. So maybe you do something like that if this holds, but we don't know yet until it happens. Right now, I'm just trying to put down ideas on the screen. That's it. One thing we can do, right, is look at totals in terms of, again, diagonals. Okay, if we do that, look at the total over here. I'm going to swap to the swap the charts to my fibs / intersections setup. If you do that, we're going to take this bit by bit. Okay, so here is our yearly levels. We're doing everything around. So we're just going to look first and foremost, right? We're going to go ahead and I'm going to pull this up once. This fixed 50 resistance fan right over here. This is if you take just like we do for Bitcoin, right? Just the previous cycle low, 2020. That's where the impulse started. And then the impulse ended. First and foremost, your first high, right? Remember, anything that is part of the last completed wave structure is your most valid in terms of fibs, right? So from that low to that high, which is what we did on Bitcoin over here, right? So for Bitcoin, what we have in terms of diagonals is, if we were to go over here and put this on, this is the same thing, right? We've got our 2020 March low, and then to our first high, right? I'm putting the exact same thing down. If we are to take a look at that, right, and I just don't understand why that's all the way to the left. It's what it is. Okay, if we take a look at that, we are currently at the 764786, right? I'm just going to explain in terms of diagonals first, and then we're going to move on in terms of that. So in terms of this, what we're saying historic price action wise, we've got support right over here. That's very clear. Right, as long as we can hold this, we can maintain trend and try to push higher. The question is, do we hold this or not? So in terms of diagonals, first and foremost, that's the first thing, and that is giving us an intersection, right? So we are currently at an intersection. Our next intersection with this diagonal, or rather with this horizontal in terms of this diagonal, our next intersection is 8th of September 2025, way later on. Okay, if you can hold this, then we also have an intersection around December for 3.01 trillion. But for now, the area we are is currently an intersection. Okay, so that's the first diagonal. Second diagonal is from that low to your all-time high, right here. Okay, if we do that, what we're doing is we're turning the 702, 707 into resistance, right? This is resistance, and of course we don't want the liquidity rate of the golden pocket to be resistance. What's happened in the past when that's been resistance, you've gone all the way down towards the 87886. Now I'm not saying we're going to go down to the 87886, okay, but below this, our next key target is right below us. This is still an intersection that is technically valid if we were to get some sort of black swan within, let's say, this month, right? Within April, this is an intersection that's going to hit, right? So I'd basically give myself till the start of May for this intersection to be hit first. If that's done, but again 29th of September, like October-ish, is when these diagonals next give you intersection. But now you've got targets for lower as well, right? You've got targets for lower. What do we have next? in terms of diagonals. I'm just going to put all the key diagonals on your screen. Okay. The next one we have is this. Okay, from the last high to the last macro low. In terms of those key diagonals, again, you are bouncing off of the liquidity rate of the golden pocket, 0.94, what was once resistance, very clean support. So in this case, this is nice. Again, if you can hold this, what you have is an SR flip, right? You have resistance, you have a breakout, you have a successful retest with an intersection. So then should we turn this and this on, if, as you can see, as long as you can hold this level, you know, you've got room for higher, right? By August, you've got room to go towards 3.5 trillion again, or 4.03 trillion, right? Just based off these two. So hopefully you can see it's not just in terms of horizontals, but also in terms of diagonals. If we can hold this area, it is very, very good. If we cannot, that's where the problem arises, right? Because then we can see we have for later this month, right? For even end of quarter 2, start of quarter 3 kind of time period, we've got intersections for 2.19 trillion. And I've not even put any horizontals below that yet. I'm simply assuming for now that 2.19 trillion is going to hold. If this doesn't hold, then of course we've got lower targets as well. Okay, so that's the next diagonal, fixed resistance V3, right? So let's look at V4 next, right? Now this is your current low to your high, just in case this is the top now, right? What you have right now is you've turned the 34382, your golden pocket plus liquidity rate, into resistance, right? Intersection with this is all the way in June, so there's no intersections really. Or end of June, you have start of July, you have around 2.19 trillion again. But this is now, you know, you could very easily do this. We see this a lot, right? When you turn a golden pocket into resistance, that you turn the golden pocket, deep/shallow golden pocket, into a range. We're not going to be surprised if that happens. In fact, if that were to happen, we'd still be in an uptrend. So that wouldn't be bearish at all. But again, the time frame for that now is towards July. Okay, if you're going by intersections, let's say mid-June to mid-July, like mid-June to end of July, start of August, kind of. That's your time frame. Okay, for if you want this particular ones to hit. Now, those are all in terms of still macro, but like local macro, right? So last cycle, current cycle. What about if we take our like macro 5-speed resistance fans? Okay, first of all, we've got this. This is if you take the macro low on total 1 and then you put it to your first discernible cycle peak in 2018. Okay, if you do that, and you've got reasons for why you bottomed here, right? That was the golden pocket, 618, 66. You have a reason for, you know, why you rejected it when you first went up. That was your negative 13114, right? So on and so forth. In terms of that, again, we've hit key levels, right over here. We've hit the 0.05, so on and so forth, right? So we've got diagonals in terms of that, and the key thing to note here is, again, historic price action, right over here. We can see very easily this is a range, right? Support. And when you lost that support, when you turned that as resistance, you used this as support back to resistance, and that's how you lost that zone. So if you were to extend this all the way to the right, now this is telling you wouldn't be surprised if you did have one more drive down, something like this. Because we've had that in the past, right? Liquidity rates of the liquidity rate and then reclaims and higher. We've had that in the past, so we won't be surprised if you got something similar again. So this then, double line right here, becomes something important to watch, right? We could very easily, in terms of historic action, do that, right? Do that, chop, perhaps hold that, reclaim, and then go up in the future. So that is, if you do start losing this 2021 12-month seller zone mid 2.6 trillion, that is something you can see. There's many reasons why we could believe 2.19 trillion is next. Right, now this is your first macro diagonals. Okay, this is from your low all the way in 2015 to your first peak, right? First discernible peak. You know, if you do that, you can see why we topped out where we did, right? Why did we top out here, for example? What's that? Liquidity rate plus golden pocket on the negative side, right? That was your first top. You know, your key supports, everything major that has happened is aligning with a fib ratio, right? As we've come to expect. The key thing here is, even though it looks like there's a lot of lines, let's not forget, you know, all you had to do was 1, 2, right? These are lines you had since 2018, so you've had 7 years worth of price action since then, right? Just over these lines. You could have literally looked at total 1 and then just read price action around these significant levels. You would have been fine, right? So even though there looks like there's a lot of lines, remember this is since 2018 now, which is why there's so many lines, right? The more range you're trying to encompass within your diagonals, the more fib ratios you're going to need to actually account for that range. If you were to increase our range in the sense of the low to the high, right? That's how we get fixed speed resistance fan, second peak. That's this, okay? From macro low to previous completed wave structure, right? High. Again, if you did that, 764786 was your bottom, right? And what we're doing right now is, again, we're losing the 4 on 4, right? We've got reasons for why the 0.5 could hit in this particular case, right? We've got reasons for that lower prices. And last but not least, if we look at the first downtrend that's discernible from that peak to that low, right? We've obviously gone past the 0 to 1 range. We can see the 1 was flipped into support twice, and then the 1.05, i.e. the liquidity rate, started to be turned into support, right? Again, all you need to do is that peak to that low in this case, right? If we do that, what we have currently is, again, an intersection, right? What we're currently holding, let me zoom in, we are currently holding the 1.382, right? We're holding the golden pocket top, the shallow golden pocket 1.382 top. You've got an intersection for July for why this should be held. So we've gone through a lot of diagonals. What does this all mean? All this means is, right, if we were to put our downtrend on, right, let's put our downtrend on first, and I'm just going to put, for example, the macros on, simply the macros, right? We're going to put that on, and that one. Forget about everything else. As long as you can stay above 0.94. Okay, as long as you can stay above 0.94, we could chop around some, but ultimately you're looking to go higher is what this is basically telling you. Okay, you got loads of intersections taking you back up towards the one of your downtrend, i.e. your previous all-time. I guess what this has not been retested yet. So if this is a bearish breakdown, then a confirmation of this being resistance would be huge, right? Again, there's no guarantees we're going to get this, but all we're doing is marking out areas that are possible in both price and time. So you have to 2026, you have June, right? June, May, August. So later on this quarter, next year, we have loads of targets depending on, do we go lower first, do we go higher first, so on and so forth, right? Intersection wise, you know, by June we could get a nasty drop only to reclaim and then go higher. That's very possible, right? But like I've already said, and like I said in my last video as well, do not discredit a elongated cycle. We could very easily have another quarter of just straight chop, okay? People always think it has to go up or down now, but you know, one thing you never account for is, okay, what if we just chop here for 6, 7, 8, 9 months? Literally what happened here. Realistically, on the higher time frame, this was just chop, right? Between some key diagonals, but ultimately your trend was held. You didn't lose any structure. You didn't lose key levels. You went back up, right? So we just got to account for what if you chop it. Now, once, like if you were to get that pump back up, right? And then you were to turn this into resistance, then your 2021 all-time high back to resistance. That would be obviously very, very bearish. I'd be the first person to tell you, yeah, this looks toppy now. And I'm not saying this doesn't look toppy. You know, we warned about profit taking and going risk-free when this was happening, but what we said was there isn't enough signs yet to go bearish, right? So if we get this, that is a confirmation of that breakdown, and that's going to be telling you, okay, what was once resistance is once again resistance. It would start to look distributive, and then you could start to work your way towards some macro swing shorts, right? Based on Bitcoin, I'm talking strictly Bitcoin right now, right? Based on the total one chart. But if you don't get that, and by the time we get up here, we flipped into support again, then that's what it was. We hit a probable area in price and time because it was possible, and then we hit the next one, and then we just be looking for higher prices. Okay, so that's total one. Don't if that's a bit confusing, right? You don't have to have all of those on. Obviously, like you guys know, I'm very used to having diagonals on my screen because I'm used to looking at segments, so it's fine. But if you don't, if that's too much, literally you just need to have one or two on. Just have one uptrending diagonal on, for example, something like this, right? Previous cycle, or like I was saying, even just this, and then one downtrending diagonal on, right? Something like this. As long as you have one macro uptrending and one macro downtrending, you can very easily find the best type of intersections. Anything else is just for extra confluence, right? So if you were to look at this chart, I look at it like this for now, something like this, right? As long as these levels hold, you're fine, right? What you don't want is if you lose the 0.94, it doesn't matter what diagonals you have in terms of the downtrend, your next intersections here. So you're saying these would be then the probable zones you're trying to go down towards, and you'd wait until price action either reclaim the 0.94 at a key intersection, right, before you take any action, or we actually got down to the next key area. Okay, you wouldn't do anything in between unless you're at another level you deem significant, right? But that's in terms of diagonals. So ultimately all we're saying is, right, if we can hold where we currently are, we're at intersections for total one. Therefore, you know, we could very well put in a unexpected move back to the upside, right? But if we cannot hold this and we start turning this to resistance, then we are turning intersections to resistance. We've got intersections lower. Okay. if that was a hit on Total One, I'd say we can take a look at Bitcoin. So it's if Total One drops, it doesn't necessarily mean only Bitcoin's going to be affected, of course, right? So it's going to be a market-wide flush. But I'd say, if we do get this in Total One, Bitcoin's probably going to be in the 60 to 50k region, I think. I'd think somewhere around there if we were to get 2.19 trillion. Just throwing numbers out. I don't have like a mathematical formula to relate the two exactly, but I'd say for now somewhere between like 60 to 50k probably. But yeah, so let's see what happens here on Total One, right? It's like we're holding what we need to for now, but what we're seeing right now is Bitcoin holding while S&P dropped 10%, right? The question, everyone's very, very bullish on that, and obviously that is a bullish thing, but the question is it actually gonna like decouple, which I don't think it is yet. We'll see, but I don't think it is yet. And the other question is, does Bitcoin just give us like a late drop, right? Just expectations, and just boom, straight down again to catch up with the rest of the market. But yeah, that is Total One. So right here, sat at the precipice of a doom or gloom, basically, right? So yeah, let's just see. Like as we speak, they're trying to close below, right? You can see that, right? The weakness is coming in. They're trying to close below. So below this, just be very careful. Like I said, 20, 40, 40. And if your invalidation hits on a 20, no point holding it. Just get rid of it. Okay, like I said, I've my 40% allocation on say, right, and the why have I got 40 instead of 20s because my when I entered, my stop loss was like less than 5%, it was like 4 point something percent. When it's that little risk, I'm willing to size up on my initial, right? That got stopped out. So with that, it's like, okay, I'm heavily cash again, like took minuscule losses, and it's fine because that's like, it's like paying, it's like having like funding fee almost, right? It's like I took a risk where the time was right, didn't take full risk, just started a allocation, and invalidations hit less than 5% for less than half of my spot position. So I'm in basically cash again fully, right? Whatever little cryptos I have is just the ones that haven't hit stop loss or break even yet. So we're just going to be cash heavy, right? And because when it's moments like this, right, yes, you can say, oh, don't be a pussy, just buy. That is extremely indigenous, whatever the word what I'm trying to say is, because like I said, if you get below, that's not a nice weekly candle, right? 3-month close was good, and now with that in mind, of course, we can now go ahead and put down a quarterly buy zone right here on total, right? So ultimately, even if you drop, you have one line in the sand, which is, can you hold 2.54 trillion? If you can hold, once again, 2.54 trillion, what do you have? You have a smiley face, okay? And then you'll be looking for the reclaim. If you hold that and then you got the reclaim, you're looking for upside. Don't get it twisted, okay? The only question is, do we hold, right? That's the only question, of course. And we won't know until we get the relevant price action in that area. Right, but otherwise, it's the what do we have here? Something like, I'll just do that, or rather that even. Yeah, very close to supply, right? We just haven't gone above supply, so just need to see that buy strength come in. Really, that's about it on Total One. Okay, so let's keep this short and sweet. That's Total One. Literally no point looking at other totals. It's going to be very obvious if Total One is red and everything else is even more red. Right, so below the mid again, we're not going to be surprised if you get that range low on Total 2 at any point. If you lose 912.9 billion, right? So just quick skim over. As long as you're below the range mid, no shots at range highs. The bat is still in play, right? You could go down all the way to an 886, of course, something like this. But does it hold? That's the question. Right? If it holds, we might get a relief pump. If not, ultimately, again, just like with Total 1, you need to go and reclaim that mid into support. Total 3, again, this is looking not nice at all, right? This moment you had to actually flip into support, you went and you created another lower high that's brought you lower. You're below 788.86 billion, which is what we were talking about last video. If you guys watched that, right, we were saying be careful if this turns to resistance, which it did, right? This turned to resistance, that sent you lower again. So again, Total 3, until you get above 788.86 billion, it's like not much to it. That's it, right? There's no point doing anything here. I want to be above this before I make any sort of decision. If you take a decision below here, you're gambling on the fact that yes, this retest is going to be successful, because again, you're below mitigated weekly order block. This range all-time high, so you're back within the old consolidation range, and if that's the case, we know range mids a very, very valid target. We've got a zone. If you lose that, rate those range lows. Those two would become very, very valid targets, right? So we're not going to be surprised if that happens now. Others, same thing. You couldn't accept back within your resistance, right? Back into support. So now you reject it back down. So now if you lose this, rate range lows isn't out of the question, is what we're saying. Right, and then let's see what happens from there. Total DeFi breaking down, absolutely peak, because this was at a very, very beautiful area, right? So again, below this trend line hold, you've got the 86 for now, but especially if you lose the 86 as well, I'll be looking at, okay, how much of the external liquidities can we go and take out, right? That's it. And most importantly, others dominance right over here. What did I say? If you start closing below this, right, below this, and then this right here then was extremely bearish. Why? Because this was your, you went to range lows, and then attempted to get above, and then look what you did. You closed the candle below your actual zone, right? And then the next, now you started to break through, break down. If you close below that, that's your, don't be an olds below this, right? That's what we've always said. Very clear indication. If you get below this, don't be an olds. Very simple, right? So everything for me is at risk free right now, because I'm not willing to hold anything in the red up over here, because I'm very aware that if you do turn this to resistance, there's a very, like, it's not a 0% chance that we go down here. And if it's not a 0% chance, then it's not a 0% chance that, if I was to hold everything, my net worth's going to drop by like 50% or something, or 60%, right? So now we will not be surprised, okay, mark my words, if one day total others dominance, sorry, comes down to 6.54, somewhere around there, 6.5% basically. Right, we've been saying this for a long time, right? I've been saying, look, it's okay to be an olds as long as you're holding this zone, but if you do not, if you close below this, yes, if you see weakness and you start closing below, just get rid of your olds, right? Now it's like, if you go and reclaim this, I have loads of money to just go and buy whatever olds I wanted to back at cheaper prices, okay? But what I am is not stressing, right? I'm not stressing, and I don't have to worry about being in the red, right? I'm either cut, right? Like I said, either cut and risk free, either in cash from closed positions, or stop loss or break even for whatever odds I am in right now. Okay. So we have this, right? That looks nasty right now. Don't get it twisted. Again, do not be surprised if 6.5 target becomes a reality at some point. Okay, I've been saying this for months. Below this, if you get below this, this does become your next target. So we'll have to keep an eye on that. Either you reclaim, right, and then this is it. You've grabbed lower liquidity. You've had a shakeout. We go higher, or in my case for now, because no liquidity has been grabbed, the high likelihood is we probably just go down towards 6.5%, right? Especially if we spend time here. Right now we only have one weekly bearish engulfing candle, right? But on the daily we've already have the breakdown and then attempted to get above, failed, right? Nasty candles. So we have a consolidation range, we have a move down. The question is, does this turn into some sort of AMD, or do we actually just do this? We'll have to see. Now, there's no reason for me to even think this is AMD. It's not like this is going down. Like, if you're looking at PO3s, typically you want your manipulation to take out liquidity, right? Nothing's been taken out yet. So if I'm doing that, in all honesty, I'm just drawing some random boxes on. Okay, this isn't even a proper AMD model. I'm just literally throwing ideas onto the wall here. But this, below this level, it's just cash is a way better option than being in any sort of altcoins, right? So that's that. Just take a look. What else? Okay, so yeah, that's all the macro indicator charts I wanted to go over. We do have a Bitcoin CM. Do you have any CME gaps on field? We have this really old one from 2024. Right, that's the only CME gap. So in terms of CME, that's all I see. Right, so am I gonna say 53k target yet? No, right? So my system, we know we've got key areas, we've got intersections. We're gonna talk about 54k and such. Should we go and lose key levels? Right, I'm not gonna even entertain 54k right now, just because if I did, then I'd be ignoring all the other key levels, right? There's no point just throwing random targets out. We'll take it like, key level by key level, right? So we do have a CME gap there to keep in mind for Confluence, but we'll talk about that should we get there and it gets filled, right? Otherwise, I'm just mentioning something for the sake of mentioning it. So that is Bitcoin. Okay, let me take a look. Disingenuous, that's the one, yeah. I got tongue-tied, bro. That's the one, Disingenuous. That's the one. Um, what's up, Chris, brother? I see you. Welcome, welcome. Hope you guys are good.
It's good, bro. How are you?
I'm good, man. How you doing?
Can't complain.
Yeah, yeah, bro. Nice. Well, yeah, just it's not been that long since I started. Just gonna do a quick one. Just Bitcoin, few volts, right? See how we're positioning. Just wanted to get the risk management portion out of the way, right? So just in case anyone's holding deep in the red, which no one should be here. You guys all know how to manage your risks, but just in case anyone is, um, we can talk about it here and make sure that no one's sat in an overly risky position, right? But this is that's total one. So that's be it. Bitcoin. Let's look at Bitcoin next. Let's see. Nasir, how you doing, brother? Welcome, man. Um, let's see. So BTC next. Let's take a look, right? First of all, and again, in terms of diagonals, what do we have? What we have is the proper ones we're looking at right now. Fist to resistance fan V1. Like I've been saying, right? The main reason for me not being overly active is of course this, because I've already said, you guys know my thoughts. There's no, I can't be bullish. I can't be properly bullish until we get above this. It's just my system, like I said, and this is why I've been. This is why I send through in every other server in as well right now, right? I said, look, don't be too premature. Just in case you do see pumps, we need to get above the 702-707 is what we talked about. You can see that is the one thing that has been acting as resistance once, twice, thrice, basically a month now. This has been resistance. Any attempts to get above, foiled, 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 right? It's just not working, clearly. So this is very clearly resistance right now. If we go and do this, this is going to look fantastic. But until we do, like I've been saying, you're not looking to go higher. And that's what it is, right? Of course, we've got V2 as well, right? So that's from there to there, and now from there to there as well. And if we take a look at that, what we have is we have the fact that the 618 has hit, right? We've hit the 618. So again, like I said, you could do something like this. Unlikely, but you could do something like this, like, if you were to stay in a tight range. But the more likely option is next time you go down, you either bounce, reclaim, and go, or you lose it to go towards the next set of areas. At the end of the day, the next question is, anytime this has been resistance, what has happened? What historic price action tells us, anytime this has been resistance, this is the range you're working with. So then we wouldn't be surprised if that range came out to play again, right? And for now, if we're talking, let's say, by the end of quarter two, right? By the end of June, start of July-ish, we're talking around 64k, right? For the bottom of the current diagonal range. And on top of that, what we can also do is go down over here and then open up V3, right? That's your downtrend. So now we have an intersection, right? We have an intersection. As long as this intersection holds, nothing to worry about. Like I've said, as long as the intersection holds, you're going to be ranging, okay? But if this intersection doesn't hold, your next obvious intersection is again towards August, right? In terms of this downtrend is towards August. You don't always have to look for intersections, right? Of course, if is just horizontal levels and yearly buyer seller zones, so on and so forth. If you were to turn the yearly buyer seller zones on, for example, right? Where is it gone? 12-month buyer seller zones. There we go. Intersections around May even for 65k, right? So depending on what happens in April, like these are definitely, we've got intersections coming up, right? May all the way through to August. So you, as early as May, could you go down and to see that 65k area, right? Should you go lower, that's when you're talking about the 57k levels, right? By again end of second quarter. But like I said, we'll do it level by level. Of course, first things first, this needs to get lost. If this isn't lost, we're talking all this like smack about price going down, and all we do is go sideways, hold, and then reclaim and go higher, right? And like I said, I don't believe in perfect retests, every single time. So I'm always thinking, okay, what about if we get a front run or a deeper pullback than usual? If we get a front run, I'd argue that the low is in. Okay, if you get a front run, I'd argue that low is lit. Maybe you get one raid again and then reclaim and go. But if you're talking front run scenario, I think intersection holds and eventually we go and reclaim. Right? This is if you are looking for a front run scenario, because like that's low enough, right? The next target is just a retest of 73k. Or I know everyone's waiting for that 73k area, right? We go way deeper than what people think, right? And then we go as deep as we've got these buyer seller zones, right? We've got the diagonals, and if we now switch over to key inflection areas, historical price ranges, which is why we know we've been under the horizontal reason why we've been rejecting here. Historical price range 6 mid, right? Which is right over here. Historical price range 6 mid is what's been providing us with resistance, right here. So that's the reason we've been and we know as long as historical price range mid is resistance, what's the next obvious target? The next obvious target is your key inflection area lower, right? So we're not going to be surprised if this key inflection area hits. That is between 73k and 64898, right? Your 2022 impulse for your historical price range impulse 2022, right? That is at 62k. And then if you get below that, your historical price range 5 mid is at 58k, and then so on and so forth, right? You just go bit by bit by bit. But your first obvious target isn't just strictly 73k on its own, but it's a zone between 73,757 and 64,898, right? The way I see things. We are accounting for the deviations around range extreme of a historical price range extreme between R5 and R6. Right, so somewhere in this zone. If you lose that, if you start turning the mid into resistance, then we can talk about 58k and maybe even as low as 48, right? Should that turn into resistance? But those targets are only in play if 68, whatever this is basically, right? This mid, the mid is around 69, like 400. Your previous all-time high around 68,997, right? So on and so forth. Or should those get turned into resistance? That's when we can focus on 58k and lower. But as you guys know, as long as this mid is holding, we're looking for higher prices, not lower. Okay, so let's see, because again, that's if we even get this. If we front run, we're looking at a reclaim of HPR6 mid. If that happens, we're not even focusing on this, we're focusing back towards all-time highs, right? So with that in mind, Bitcoin, middle of nowhere, literally middle of nowhere. You do not do anything here. If you're scalping on the literal lower time frame, that's a different story, okay? Because obviously that's a whole different ballpark to try and catch bottoms and tops in terms of macro moves. But in terms of now higher time frame perspective, this is a non-action area, and this is the same thing I've been saying, right? You don't do anything with Bitcoin here. You wait, you take some shorts should you get to the high, which we've gone, right? And anytime you've been there's been some really good shorting opportunities, but you don't do anything here, right? The only reason you do something here is because of your local fifth speed resistance fans. That's it. Okay, what do I mean by that? If I open up fifth speed resistance fan current here, right, this is now your from this high to that low, right? The extension of that. You're at the 1.13, 1.114, right? So you had the smiley face here. That's what I talked about last stream and also last video, which is the reason again you got that pump up, right? But you rejected, you're back down here. So it's just as long as this level holds, you're looking to scalp this, scalp mindset trades basically, right? But on but if not for that, right? If not for this, this is the front run zone, right? You've hit your look. What is this? What are these ratios? They're your in this particular context, they're your front run of your range extreme, right? So you either go for the front run of the range extreme, or you go for the liquidity rate of the range extreme, which you just overlap this with the other fibs this side, right? So we have a in the middle of nowhere for a higher time frame perspective, in the middle of nowhere. Now if you're looking to get that scalp to swing market trades off, then you have areas like we're talking about here that you can worry about. But in terms of the macro perspective, yeah, in the middle of nowhere right now, right? Nothing much to be gained from trying to blindly take a trade here basically. Again, scalp to swing market is a completely different story to higher time frame, okay? But that's Bitcoin, literally. That's it. Now, something else you can do, of course, is look for macro fifth speed resistance fans, okay? So if I was to do this, right, again, what we're doing here is, if I was to click on this, this is from that low to now your last completed high, right? If you do that, the bottom again was the 764786, right? And then this flip was the golden pocket flip, so on and so forth. So we can take a look at that. Now if I go over here, for example, right, I turn one of these off. There we go. And let me just make sure that everything is pinned, for example, properly, right? Let's make sure everything is 100% accurately pinned. So it should be, but you can't be too sure. So apparently it's not. Okay. So what we're gonna do, this down over here. There we go, and we're gonna take this all the way up to up over here. that was your peak. Much easier if I go on the daily now. Let's do that. Go to the hourly. And then go to the 1 minute. There it is. Reckon I can go to the minute when Bitcoin's at $0. One sec, let me, because that's definitely gonna cause problems. Yeah, what? See, so I was certain that I put this. Yeah, okay, not available. Never mind. What is going on? Have I messed my trading view up just that bad? One sec, let me get out of here and go to the daily. There we go. Okay, that, I was gonna say that should be good enough, but this is, okay, make sure this hasn't moved. Yeah, that's fine, that's fine. Okay, okay, that's fine. So if we do that, right, we've got this diagonal that stays with us through time, right? Now you can go and put this to this wick first, just to show you the validity of it, right? If I was to copy this, and then for the copy I was to go and put it into this wick first, like you've got reasons, right? For example, you've got reason then why, again, that high, low, all of that came in, right? So this is the power of diagonals. It will work. But the problem is, if you're doing this, you're going to need a load of different diagonals on, right? So I would much rather just put something newer, such as this one. Right. With that being said, let's now go ahead and we're going to, let's put this on, we're going to go to negative, aren't we? So we're going to have to go for golden pocket race students inverse. There we go. So we just about front ran this golden pocket here in this case. Let's go ahead and put range. There we go. So we've gone and rejected off the range too. Very potent, right? It's a front run, but it's there nonetheless. So the range has also been rejected off of. And then after that, it's just deep retracements. There we go. There's your deep retracements. We've got the reason now for that bottom there. You hit the 764786 on terms of your macro, right? And therefore your shallow retracement then is right over here. So you're currently bouncing off your liquidity rate of the range extreme. So now we have one of the reason to think, okay, as long as this zone holds, right, we're gonna get that front run scenario being played out, because at the end of the day, what was once resistance has been flipped to support, right? Resistance in the past, you've distributed here, resistance again, flip to support. As long as you can hold this, there's no reason to be thinking of lower, right? If you're strictly looking at this diagonal here, but if you lose this, then we probably get that deep pullback scenario. People waiting for just 73k probably gonna get rated a bit, right? So that, you know, we're using diagonals to try and differentiate between when do we get a front run versus when do we get that deep raid. As long as you're above this, you're gonna front run that peak, because people are only thinking about this in terms of the horizontal, are gonna be waiting for it, when in reality, in terms of diagonals, you had a multiple retest in terms of diagonals here now, breakout retests, right? But if you lose this, then we're not waiting for that perfect tap, in my opinion, at 73k. We're waiting for the deeper diagonals to get hit, and that's it. Let's do this. I'm gonna lock that in place and hide it for now. But yeah, that's my thoughts on Bitcoin, right? Just wanted to do it in terms of diagonals to explain, okay, front run versus deep rate scenario. In terms of horizontals, it's a perfect level everyone's waiting for, but in terms of diagonals, it's a bit more complex right now in the sense you can see, because there's a lot of diagonals that support it, even in terms of historical price action, that could lead us to a front run. But at the same time, there's a lot of diagonals we're not turning to resistance that's telling us we could go way deeper than just this. So for now, it's easiest to think about this in terms of the diagonals, such as this one, right? So just this one that are warning us about, okay, this could be a potential front run. We look at those first and foremost. But should we go and lose these, then forget about just 73k. Just go and turn your other diagonals on that are giving you that deeper levels, right? So that's my thoughts on Bitcoin. I can only speak mainly in terms of TA now, right? I'm not some quant who has connections with, I don't know, the Russian oligarchs, right? I don't know what the big boys are going to do with their money, right? Whatever they do at the end of the day, all this speculation that we're doing, it could go out the window. It doesn't mean anything if they decide, collectively that they want a certain price, right? If that's the case. But at least we can try and give ourselves cues to trigger with, right? We're planning. It's sort of like having a checklist should your plane crash into the middle of the ocean at night time, right? It's way better to be prepared for this scenario with certain like pre-mandated checklists and safety features than just hoping that never happens to begin with. So for now, we're going to stick with the front run thesis first, since that's the diagonals being held. But should those get lost, right? Should those levels get lost, like we were talking about, then we probably get a deeper pullback than people are thinking. Probably a deeper pullback than people are thinking. So that's something to watch for. But in either case, right, it's like, again, if these holds and you see others going to reclaim that level of support, right, that we were talking about, like others goes and gets back above, then that's your cue to, okay, let's just start laddering back into alts again, right? But specifically right now, if you're going to trade anything, just let it be Bitcoin. There's no point trying to open up 50 different positions for 50 different coins. If you're going to trade, just trade Bitcoin right now. Hopefully the Total 1 chart is making that blindingly obvious. Everything else looks absolutely weak. Total 1's the only one that looks like it's got any sort of fighting chance to at least hold its yearly level, right? Everything else doesn't. Total 2, way below, right? Total 3, below its yearly levels. Others, way below its yearly levels, right? So the strength is in Bitcoin. That much is blindingly obvious. So that is Bitcoin, right? So let's look at a few more. Let's look at Ethereum, Solana, so on and so forth. I'm going to take too much of your guys' time today, but let's look at Ethereum. So like we said, Ethereum dominance, absolutely trash, right? The 886 just not providing, buyers are not stepping in right now, okay? That does not mean this isn't validated yet, okay? Because like I said, this is a macro wave structure, so it can take time for that structure to form. But as of right now, there's nothing. No signs of strength here. Okay, so we're just going to have to hold out a bit longer. Just because the harmonic's completed does not mean you just automatically pull the trigger on it. A PRZ is only really valid in my eyes once buyers go and actually mandate and validate it, right? There's nothing happening. No auctioning here, nothing. Just straight up just selling, right? So for now, all we have is a completed M shape. We don't have a valid completed M shape yet, in my opinion. Simply because, again, buyers haven't confirmed that 886 they see is a PRZ. So no point. Similarly, let's look at Bitcoin dominance, right? Bitcoin dominance probably going to be going higher and higher and higher. But BTCD, yeah, 63%. What were we talking about? Eventually, we're going to get above 62%. That happened right here, right? 62.2. This was, again, we looked at this as soon as the liquidation wick was created, right? How did we get these levels, right? That level was got. Now, I forget what time frame this was. Yeah, it was on the monthly, right? From that high to that low. This was your monthly seller zone. This is where that monthly seller zone, this was where that liquidation wick came in, I'm sure, right? We have 2 months later, look, 2 months later we finally flipped that 62% target. So it can take time, but again, goated system. We went, we hit 62%, closed above, flipped it to support. So now I'm looking at the 1.618 first. After the 1.618, we're talking about 64.10 to 64.34. And for now, ultimately 1.618, right? That ABCD, I want to see what happens at that 1.618 in the middle of the 2-week fair value gap. But Bitcoin dominance, right? Let's go and see what happens. That's it. We have 1.618 first. Did we start to show signs of distribution? Did we just blast straight through and go to higher targets? We'll have to find out. So that is Bitcoin dominance. Anything else I want to look at real quick? No, nothing else. Right, let's look at Ethereum then. Ethereum, very, very weak. Sat at the 886. No bids coming in. 6-month buy seller zone mid lost. Okay, right here. There we go. There's your 6-month seller zone. There's your 6-month buy zone. Together, that's the 6-month buy seller zone mid. And yeah, that's lost. Absolutely nasty work, right? So we know we've turned this to resistance right here, right? We turned it again. If key inflection areas turn to resistance, what do we look for next? we look for the historical price range below it, right? The mid of that. The mid is lining up with the buyer seller zone low around 1,520 basically. Right, so if this 86 is lost, that's your saving grace. That's your saving grace right now. If the 86 is lost, yeah, you go down towards 1,520s. That is also backed up by you can multiple ways you can do this. That's the first range I saw, and this is the other range I'm seeing right now, right? Wait, hang on, over here on Ethereum. If you take a look at in this regard, again, historical price range 1 / historical price range 2, range boundary, right? That is at 1,463. So once again, you could go and do a key inflection area for this reason. You could do a key inflection area here, right? You definitely could. Your key inflection area, in my opinion, would be something like this if you're going off the 6 months for now. Let's just make sure that we account for all sorts of chop. Right, let's go to the monthly. Is there any reason why we should go down to this level? What about the 3 months first? We have, for example, that low. Okay, if there's that low, do we have any reason for having a wick down over there? Monthly, I would say the best options, probably something like this, right, to account for everything. Let's go to the weekly to get a cleaner view. Okay, no, candle bodies, well, I'm going to go with there. Perfect. You've got a key inflection area down here. There you go. There's your key inflection area, right? So you've got a key inflection area again between 1529 and 1394, right? So if we're losing this as support, the historical range mid, historical price range mid, then we know this is going to be the next area to go to. That's it, right? It's as simple as that. So we go down here, and if it's a successful, one sec, I've got my key inflection area, it's a bit weird in this one. But if it's a successful bid here, then again we look for moves back to the upside. We're within HBR2. But if not, then we can talk about lower if you ever breach that, right? But for now, this is a valid target to have. Below this, again, that would be the next key area I see it go down to, right? That's it. So very, very weak across the board, right? Again, Bitcoin's the strongest looking coin. Aptos, right? This one, $4. We're literally down to your, I think this is 3 month, yeah, previous quarter. Seller zone low, we're bouncing off it. So again, if you wanted to take some scalps, you can do so, right? You want to take some scalp longs, you want to attempt, you do this. Very simple. Okay, 0.5% risk. You're looking for this to go up towards here, right? And you do account for historical deviations around that low if you're going to take the trade, right? But logically speaking, right now, I don't really see much historical deviations. It's a bit too far back to really see accurately. But if you wanted to take a scalp to swing mindset trade, it's this. And if you close below 460, just get rid of it. Right? If you close below 460, just get rid of it. There, something like that. 0.37% risk, just to this high. And it's a trade you can try and take. Right? Am I guaranteeing it's going to go up? No, but you're just trying to play a bounce off a key level. Right? You're not going to be risking much, just 0.37%. But otherwise, on a macro scale, again, what was looking very, very strong, see, it doesn't take much, right? So all of a sudden, once again, not looking that strong at all. The weekly, if you can hold and close the weekly again above 460 SFP but close above, then you have taken this wick, you have a reason to try and aim back to the upside, right? But otherwise, let's see what happens at $4.32 again. I'd say that's your yearly level. So yeah, just wait. That's why, right? It's like the reason I've not been very active and not giving many calls right now is because there's a moment I'm not going to give calls for the sake of giving calls, right? When you're at key level and you see buyer strength coming in, that's the important thing. Just being at key level isn't enough. You need to see buyers auctioning. A key level isn't really valid if no one's auctioning there, right? We're just not seeing many auctions at key levels right now. It's just like sell pressure, sell pressure, sell pressure. So it's a there's moments where you just protect your capital with all you have, right? And this is one of those moments. There were some entries to be had before, right? There were some entries to be had over here, because the risk was very, very easy to manage, especially if you use 20-40-40, virtually no risk. And this is why I do the 20-40-40. If you'd gone all in, you might have lost 10-15% of your portfolio, right? But with this, you're not even losing 2 or 3% of your total portfolio doing 20-40-40. That's how well we managed our risk, right? So now we just wait. We just wait for more strength to come in. There is no strength, absolutely none right now. Okay, no. So we wait for key levels to get hit, some sort of actionable prices to come in. Again, if you want to scalp, that's a different story, right? Scalping is a different story. But actually, looking for spot plays to the upside, so on and so forth. Those are, I'd rather wait until some more strength came in before giving those, right? Because yeah, I could try and give you spot plays on the lower time frame, but that'd very much be like treating your spot bag as a scalping tool, right? And it's like not everyone wants to do that, so just give you as leverage signals instead. But yeah, if you wanted to take a long, I wouldn't even take a long of this because that closed at resistance, not strong, right? But if you wanted to take a scalp again, it's like your risk is virtually non-existent here for a scalp, mind you, not anything else. Again, something like this, right? So 0.28% stop loss, right? You go reduce position size, like you play defensive. You could do something like that, but otherwise, just wait for better days, right? Ondo, let's take a look. Ondo, I'm sure he revisited. Yeah, hang on, where's it gone? It's here. Sorry, there. Ondo has revisited our initial PRZ right here. PRZ1, right? If that is lost, you guys know where this is going next. This is the same levels, nothing's changed. This is your PRZ2. You're just waiting for key levels to get hit and for actionable price action to come in, like we had here, especially on the lower time frame. Right? If you did time frame alignment, look at daily price action, look for hourly entry models, so on and so forth. We had actionable areas in both these times. Right now, we're not in really anywhere. So we'll see, right? But again, as long as this holds on Ondo, right, you can try and enter some spot there, right? But you're going to do 20, 40, 40. Don't be a hero, right? And if you close below, just get rid of it, because then you either buy when this reclaims, or if you go lower towards your next PRZ there. But yeah, you can see not very much strength at all. Like hype, weak. Right, look, what did you do? That level we talked about, right? This accumulation didn't play out, right? You got one tiny little pump, and then you dumped again. So this is one of the ones I put in the chart dump area, right? That shock that I put in the chart dump area, right? That short we said, the one where I said, okay, look for distribution structure to come out the PRZ and short. We got that, and that's what's in play right now, right? The actual key level that we talked about, the 702, 707, log 4 on 4. That is currently resistant. So any form of bullishness we had that was being showcased here has now faded until we reclaim it's not there anymore, right? So either you reclaim this as support, or the next key area I'd see on the screen is the 786, right? You have the 764, 786 zone down over here, right? But so either reclaim to enter or wait for those lower levels. There's no point entering right here, in my opinion, for spot. There's none, because risk reward is infinitely better above this zone than below it, right? Maybe if Doge finally gives us the 886, that's something else to watch for. The 886 on Doge, maybe we finally get it, right? We finally get the bad. Trump, again, absolutely dead, right? This was the area to try and take the bid. It's not there anymore, right? It's gone. So yeah, Trump, I'm not in Trump anymore, right? That got stopped out at break even at the 886. Sui holding up. I was going to say holding up decently well, but still, that's another lower high, right? The 886, you're still above that PRZ. Maybe you double bottom, who knows? But ultimately, if you lose that, we know where the next area is, right? I'm not here to try and be a hero and tell you exactly where I think we're going to bottom. I'm here to give you the key levels, and then we just read the price action to actually look for risk managed plays, which in hindsight will be the bottom, right? Anyone saying, oh, we're going to bottom here for sure, it's a gamble, and that's it. No one knows where we're going to bottom or top. There's so many key levels. There's so many different ways to get key levels, right? We just manage our risk, add key areas. That's it. But yeah, nothing much to do on SWI right now. I'd wait to see a raid, right? If it's a raid or a successful retest. Now that'd be interesting. You're broken out. If you can get a successful retest, and then maybe something like this, right? Successful retest, reclaim. That'd look pretty bullish, right? And then I'd look for a break up to the upside following that. But that seems very unlikely right now, looking at the market as a whole. Right, so we'll see what happens. But otherwise, what we did have here was again inverse smiley face, right? So distributive structure playing out. Say now this one, I think we get the 1.13 soon. Okay, and I've been very I've not actually put this in the altcoins channel yet for that very reason, because even though we were at such a key area, I just didn't see enough buy strength come in to warrant putting this out like Ondo, right? The reason I put Ondo down, buy strength, I saw once we got the buy strength was coming in. We didn't really have that for say, right? Which is why I didn't put this as an official call. And I'm glad I didn't, because now we can see we've gone and lost that level. So my hunch was correct, right? we have the, so I'll be looking at the 1.13 next. This reminds me of what MKR was doing, right? MKR hit our 886, give us the 1.13 of the shark before, and then went higher. So yeah, let's see what happens at the 1.13, the mid of this consolidation range as well. So yeah, either we get that 1.13 and then we enter based on the price action we see there, or you know, you go from here, reverse, reclaim the 886, so on and so forth, get some sort of smiley face structure, we enter the smiley face. Nothing to be done on say right now. Okay, AVAX back to the yearly level, right? Fighting at the yearly level. You have your, again, 2024 12-month buy zone low, right? And again, you guys know what this is by now. If this holds, great. But if you go and lose this, right, if this is lost, your next yearly level is at $10.90. Okay, now you have this in between. Why did I mark this down? That's a very good question. Must have been the monthly. Yeah, you had a monthly fair value gap here in the past, right? This is the mid of the said monthly fair value gap. And currently the area that's not been tested now is this, right? So we'll see what happens. But above 1729, if it holds above, you can look for scalp to swing mindsets higher, right? But if you close below here, I wouldn't do anything personally, right? Just wait until we get those lower levels or we reclaim, right? Because otherwise you're entering a suboptimal areas. This is a suboptimal area. You can see that. That's a suboptimal area, right? It's either here or here. That's where the optimal areas are. So we just wait for price action. That's it. It's boring, but sometimes, you know, when the market is not in an uptrend and you're having days like this, what's important is, you know, planning. What's important is getting your knowledge up, planning, right? But also not being caught up in having to feel like, oh, I need to be in a trade, I need to be in a trade every day, and taking shit trades. That's something people do, right? People think they need to be in a trade every day. You don't. What you need to be in is a trade at the right time, right? Every day is not the right time. Scalping again is a different thing, right? But I'm talking in terms of macro, especially macro. You don't need to be in a trade every day, okay? You're not going to get amazing entries every day. There's very, you know, throughout your lifetimes, there's going to be very limited windows within which you get amazing entries for any assets. Rest of the time, you're just looking to actually offload if you catch that amazing entry, whether it's a long or a short, right? So again, if this is a successful close above, by the time the weekly closes, you can try and look for, again, scalp the swing plays to the upside. But if you close below, it's what it is. I think we get lower again. Right. So no matter what you're looking at, Sol, look at that. What have we got? We've got 1, 2, 3 straight weeks. This will make it a month, right? Of tonight's close will make it a month of attempts to get above our yearly levels. What do we see though at the yearly levels? Do we see any sort of significant moves? And the answer is no. Any attempted moves above, you close below, right? So it's just been a month basically of distributing around a yearly level. So our next target is here. And again, you know, there was some people thought this would be impossible when we were looking at Sol all the way up here, right? But what's the first thing I said on Sol? I said if we ever lose this with the trend line, right? That trend line is ever lost. When we hit the trend line is ever lost, next target is straight up 133. We got one candle to get to there. Right? So I'm telling you, below this, the next target is 102 to 78. People think it's impossible, and the next thing you know, you're literally you're contemplating selling your bags at 78. When you could have easily got rid of it at the actual signs of weakness at the previous mentioned times. Alright, so if this holds, it holds. It's whatever. I'm not interested in buying here. Right, even for spot, I'm not interested in buying here. I don't care. I want to stick to my system, my plan. If we reclaim, I will enter loads of spots here again. Right. Otherwise, I'm going to wait for some sort of raid, some sort of bottoming structure to come in down at these areas, right? Or something telling me buyers are insanely trigger happy at this area. Then I'll buy with them. I'm going to buy with the on-side traders, not the off-side traders. Okay. So that is Solana. Vanry, what are you doing? Absolute craziness, right? You had a little bit move up and then straight back down. Hit the supply line, back down, right? So I have a feeling this is basically going to go to fill that demand zone. No, I have a feeling that's pretty much the only thing left to do, right? Is to fill that demand zone. So let's see, around 0.020 Vanry, maybe the future is going to come. Either that, you literally go and rate the lows, put a new low in on Vanry. So those are some of the ones we looked at, pretty much all of them. PAL, one of the stronger ones in terms of, actually no, never mind. The reason it looks like that's because of the small candle moves, but that's because there's low volume. But above the 886 is fine, below the 886 is not. Eventually I would think the 1.13 gets hit on this one. on PAL. So that is PAL. Let's take a look at now some other coins. So what about LDO below the 886, right? Okay, so anyone who did buy LDO here, right, your stop loss at break even should have hit. If it didn't, and you forgot to put your stop loss to break even, it's, you know, below this, it won't be surprised if you go down towards, you know, 64 to 45, right? So if your original plan was if you're going to come down to entry and you're going to close, right, then just, in my opinion, just get rid of it until you reclaim. You can just re-enter again. Okay, but otherwise LTO again, weak, very, very weak. OP, I think we hit our next yearly level. We did 65 cents, right? We were waiting for that. It's hit. No buyers stepping in. It's what it is. You had 1 day of a buy stepping in, and then now apart from that, just no buy stepping in whatsoever. Harmonics were turned to resistance. Yearly level was turned to resistance. Your next yearly level got hit, right? 0.658. Again, if you can now do something like this, reclaim, right? You can try and enter OP off here to try and ride this to the upside. Otherwise, you just wait. Wait until structure comes in. Weekly buy zones, yearly buy zone mid, below all of it for now. So let's see what happens by 7 hours time, but again, very, very weak. Forget everything else. Let's look at Cetus. Cetus back at the 886. Okay, you're not closing below it for now, which is good. If you can put a smiley face in here, that'd be nice. I don't know if you will though. But again, the key levels haven't changed, right? You're fine as long as you're above 0.8858. As long as you can maintain closes above this area, you're fine. Below that is when the problem arises. If you start closing below this, you can see, well, you're not going to be surprised if you head back all the way down to 0.06. Okay, so you basically got to make sure, you're trying to make sure that this level stays a support. This area right over here. For now, you're in the middle of it, ongoing. Let's see what happens. ENA, there we go. What were we talking about? What were we talking about? I was saying for such a long time, look, ever lose this, you do not stay above the macro point of control, right? That's the one thing I'd emphasize the most. If you're not above the macro point of control, expect eventually these areas to get hit. There we go, right? Look at this, multiple attempts for the macro point of control, multiple, and not just one, right? Multiple to stay above, but you never managed to stay above. Just lower time frame deviations, right? And then this got turned to resistance. Then you lost the 2024, that's the last saving grace, 0.333. What do we say? Below this, this is your key level. Right, so you came down, you hit the 3.618, right? And then you went relief bounce, hit the 886, went all the way back up to 0.33, now you're here. This literally happened within the space of the last few days. I have not even checked the ENA chart, literally looking at it now, but that is beautiful. And again, I emphasize, this is what it means to have significant levels on your screen. Okay, you can step away. You don't have to do anything, right? You can step away. You can be confident that at least price action is going to be reacting at these areas. I've not looked at the ENA chart. Okay, this is the I'm looking at it now since I just realized this is where I sit. But even then, we can see, right? The option to actually take place was how would you have done it based on that retest? It would have been this, right? If you were here, you look to the left, you account for any historic deviations, right? So you've had historic deviations around here. So then you go and put your stop loss around there like this, and then you'd have done this. Very simple. That would have been a trade that played out. Again, like I said, I've not been trading properly, right? Last week I didn't trade. This week I'm not really traded. Okay, lower time frame scalps here and there on Bitcoin, but that's about it. Otherwise, I've been really, really busy. I didn't trade this, but if I had seen this one, this is how I would have taken the trade myself. Again, why? Something we learn first lesson of core. You have confirmation that a key level buyers are stepping in. You had confirmation there, right? You could have taken a risk managed lower time frame to higher time frame mindset play, which is what you're doing when you're trying to counteract the trend. Exact same thing over here. And then when you see the rejection, you hedge back to the downside. You don't do anything here now. Okay, below this, the Shark 886 is very much a validity. So let's see what happens to ENA here. Right. This is, again, I remember this is what I've been saying 20, 40, 40 every single time. I've been saying if you guys are going to attempt at any coins, right, even 2-3 weeks ago, you were at areas where it was very, very obvious how you would manage your risk. Right, those are areas where you start building your positions. Hence why I built some of mine. I told you guys, like, if you're completely sidelined, consider building some, but in a risk managed manner. And this is why. Right, because you have significant levels. Remember, what is our purpose, right? What am I trying? What do I get across to you guys? What do we do in our one-on-ones, right? The main purpose, especially in core, before we even go on to advanced, is 1, learn to find significant levels. Number 2, learn to analyze price action at those significant levels to deem, okay, are the buyers taking control? Are sellers taking control? Do we see absorption from either side of the market? Are aggressive buyers rewarded? Are aggressive sellers rewarded? Right? Which side is showing me an edge? Once you have that question answered and you decided either you're going to go long or short, number 3, learn how to execute the trade in a risk managed manner. That is it. To be profitable, those are the three things you need to know, and just execute on over time. That's it. There's no, there's no secret, right? There's no underlying secret. Everything else is simply extra help, right? Extra confluence, so on and so forth. But to be profitable long term, that's the only 3 things you need. You don't need anything else, right? Learn to find significant levels, learn to analyze price action at the significant levels, and then once it's time, according to your price action analysis to actually enter a trade, learn to manage risks. And that 3rd step is there for situations like this, right? Because even 2-3 weeks ago, we were at areas on many coins where step number 1, we were at significant areas. Step number 2, based on the price action just 2 weeks ago, many alts even were saying, okay, look, you're at areas where you can easily manage your risk, right? Which is why then step number 3 for higher time frame, what do we do? 20, 40, 40, and based on the invalidation, we change the ratios around. If we do all that and then you get stopped out, it's not because we took a shit trade. It's not because we FOMO'd in at a wrong time or anything like this, right? Sometimes you do everything right and the market's still going to go against you. It's what it is. You can't be 100% right you can't be right 100% of the time, right? What's important is if you are wrong, you don't lose 40, 50, 60% of your portfolios. Okay? So the 20, 40, 40, the entry strategy that I kept telling you guys, even the stream we did last week, I said if you guys are going to be in any positions, make sure you stick to 20, 40, 40, right? Adhere to the risk management. Hopefully you now see why. It doesn't take much for theses to change. Right, below these levels, I'm not interested. ENA, if you now go and reclaim something like this, sure, I'll buy. But below this, what's the point? There's no point holding here. Like if you're thinking as a long-term investor, you'll be like, yeah, we're deep value. Like you can get some, yes. And if you're a complete beginner, then the first strategy I recommend is just learn to DCA properly. Right? But we are not just trying to be a get in here and hold a coin for 5 years. That's not the kind of strategy that I want to go with, right? So with that in mind, we're still thinking long term, we're still thinking spot, but we're still trying to be as effective as possible with our entries and our risk management. And in that case, yes, I could buy spot here, but it would make much more sense to buy a spot over here. I asked myself, okay, I know this is spot, but would I enter a leverage trade here? If the answer is no, perhaps I shouldn't enter a spot trade here either. Right? Normally you ask yourself, would you enter spot here and then do leverage, right? But the difference here is with leverage, you're way more prone to actually having those tight risk managed entries, right? So I'm just thinking, okay, if I wouldn't enter a leverage place here whatsoever, why would I enter spot? Because, I'm not one of those people that's going to be busy for a month straight and not look at the charts. I'll be looking at the charts pretty regularly, right? It's just looking at the charts and trading are 2 different things. I've not been trading for the last 2 or 3 weeks, right? But if I look at the chart regularly, I'll know when the reclaim is happening. So I'd rather just re-enter there because then price action is telling me significant levels, buyers are trying to reclaim, easy to manage risk above this area. We've got these key targets, so on and so forth. And there's way more of a reason to be in a trade. Everything we do, we need a reason, right? Below this, you don't have any reason to be in ENA apart from the fact, quote unquote, is deep value. This is deep value, but so is 26 cents, and so is 21 cents, and so is 19 cents, right? So you're in terms of, again, you're at significant areas, right? Price action analysis, which side is showing at the edge? Right now, it's not the buyers, it's the sellers. Therefore, you wouldn't buy here. That's the way I'm trying to do it, right? Reclaim, buyers would be showing at the edge again. Therefore, you would go and buy some spot, right? If you're going to get into a spot bag, you would enter back in over there. But otherwise, maybe we get the 86 of the shark, 0.2668, right? We've got all these key levels now. We're losing this one after the other, so we'll see. Right, if the reclaim happens, we get in. Otherwise, just wait out for now. Ton, that short entry. Now, which one did I give this in? I gave this in, let me see. This would have been Tuesday. So this is the Unity stream that I did this week. This was the ton short that I gave. Right, this one is this one hit of that 12.47. I need to update this in Unity. This was given because of I saw that the inverted smiley face was coming into play, right? So that was the reason this was given. So now on TON again, let's see, $3.13. That's your key area, right? Let's see what happens. If that is lost, then we could come back in. And if the red box is lost, then the next area I'll be looking for, and I hope we get, is the 886 off the bat. I hope we get that 886. You know, deep value. I want some cheap ton. Right, I made my profits in this move up. Stop losses are break even, risk free trade. So taking some nice profits. Stop losses are break even. If I get stopped out, we're now going to be looking at here. That's it. Right. But apart from that, so someone put a Farcoin chat in, Farcoin thing in. So let's take a look. Loads of aggressive buying going on here now for Farcoin. Not really playing out. So loads of aggressive buying, trap traders basically. I wouldn't call this a shock, a bit too shallow. Yeah, that looks a bit distributive. Yeah, let's do that. So technically it's like, you know, if you're talking even daily, your trend has shifted, right? So your last lower high that led to the lower lows, for example, in terms of internal, that's been taken out, right? But your external hasn't. Your first proper external as C point here, your last lower high that led to all of this, that hasn't been taken out. So we can still construe this as a lower high. So do we have a bearish harmonic here is the question. Hang on. Not that. So we'll be going from here to here. If this was anything, it'd be a shock. Nah, a bit too shallow, 8.4, right? I want an 8.86. Hang on, that's the one I just deleted. What am I doing? But yeah, Farcoin, as long as you hold this between 40 and 35 cents, you're good. Otherwise, I think someone put the 707 on earlier, right? I think it's from here to here. 703. So that is going to be a 1.414. You're completely right. That's going to take us to a retest of your alternate bat. So this could very well be a type 2. Okay. So Farcoin, surprisingly, one of the only ones that has way nicer structure, which is Farcoin's got the nicest structure out of all the coins we looked at so far today. What a world we live in. Okay, great. So yeah, the 1.414 holds. What you have is a successful retest and a type 2 of a of the alternate bat, basically. Yeah, we haven't hit the the terminal 1 yet, but you know, you're reconfirming the PRZ if it's successful. If it's not, then you know the structure argument goes out the window. But if it is, yeah, absolutely crazy. Look at some of these not near TIA, right? TIA 886. So we're at the PRZ for TIA. This is one to keep on your radar, like I've been saying, right? We're at the PRZ, and we just need, like, you know, we just need structure. Structure hasn't finished yet, very clearly, but if the structure can hold in this area, and we can see, you know, buyer strength, then TIA's an amazing one. Okay, macro M shape, huge sell-off. The entire move-up's pretty much been retraced. So if this went up now, it'd be a very, very hated rally. Pepe still above your 886. Okay, so as long as you're above that 886, we now have a shot at, again, when you're holding this as support, as long as we're above the 886, ultimately you're targeting higher. Okay, so we can get rid of this, and I'm going to get rid of this also. As long as you're above the 886, you are fine. So if the weekly closes above, right, close above the 886, let's say if it close like this, I'll just enter something like this, right? Something like that. Historic deviation, and then there. Risk reward of 3, even just to the next target, right? That'll still be a trade worth taking. But that depends entirely on the weekly close. Okay, so if the weekly, wherever the weekly were to close, you would just enter from there. Tara, otherwise, let's take a look. Tara, deeper into the order block. At this point, I really want that scenario. I've had this on the scribble on the screen for like a few months now, right? Give us the raid and then the reclaim. If I see that on Tara, I'm going to be buying a nice bag of this. It'd be a low cap play, so obviously I'm not going to be putting everything I have into it, but just based off the structure, I'd love for a raid to reclaim on Tara. But there's so many coins, honestly. CRV, right? You're still above your 886 of the shark, right? You're still above your key area. As long as you're above the supply zone, as long as you're above, you still maintain the smiley face, basically. We can look for higher. It's a valid breakout for now. We just need to confirm the breakout. See, like, you've got a retest, then maybe we get some sort of type 2 here, right? Something we can construe as a type 2 return, and then perhaps we go off from there. But CRV is still worth keeping an eye on at these levels. As long as you're above the mid of the red box, especially, worth keeping an eye on, right? Above these yearly levels. Farcoin, let's take a look. You're literally heading to all-time lows. Nearly. Below this level, it is just all-time lows. So nothing much to say there, right? Literally at the lows, no strength right now. So yeah, we've gone over a few things, guys. It's gonna be pretty, like I said, shorter stream because there's nothing to do, right? You don't do anything in these moments. You preserve your capital, don't take any stupid plays, and just wait for the market to show its hand properly, right? Yeah, we've had a sell-off, right? You're not looking for shorts here, right? This is not me telling you guys to go and open shorts. You're not looking for shorts here, okay? Like, look at file and tell me you're looking for shorts. Obviously not, right? What you're not doing either is, however, going and full porting along, thinking this is it, right? We're gonna go up. This is just FUD. To someone that is just constantly, don't constantly just be just one side of the market or the other, right? You got to be able to flip flop based on triggers. If you're going to survive as a trader, right? Important word there, trader, not investor. As a trader, if you want to survive, you've got to be able to switch your biases based on triggers, not emotions. Okay, and our triggers is price action around key levels, right? That is all we are focusing on. So let me check back to the chat. Yeah, sure. See you guys. See you later. What's up, Adam? How you doing, brother? Yeah, same, brother. I've not been trading recently. I've just been about like the last 2-3 weeks. I've been really busy. I've not traded much. ETH needs a big defib, yeah. Yeah, so I'm all out of ETH. I've got no spot ETH at this moment. Right, I had 6 figures parked in that, and I took half of that out. Like, I already taken profits on the move up, right? So I've been very vocal about this. I took profits on that move up to that high, and then whatever I had left. So I de-risked when we basically as soon as we lost this, right? That's the other thing I was saying. I de-risked here, right? Reduced position size, and then once we came down to the key inflection area, right? There is some more, right? So I had a less than 50k in ETH basically. And then my trigger was, okay, if we lose the middle of the key inflection area, that is when I will fully close, right? So we lost the middle of the key inflection area, turned it to resistance here, this is where I fully closed my ETH back. So that's, that's 6 figures free from ETH, plus ETH against BTC. So I've got a load of cash, many olds got stopped at break even as well. And then some that entered that hadn't moved to any TPs yet, that weren't at break even, those got stopped for like I said, for less than 5%, it was like 4 point something percent. I got stopped. So yeah, got a lot of cash free, just waiting to just re-roll it back in again. I just need confirmations a bit. I said, as we're speaking on ETH, look, we're trying to lose that 886. You lose that, it could be a very fast drop to 1,500s again, right? So yeah, good luck with that, bro, Adam. Good luck with your moving and stuff, man. Just reach out whenever you're ready to resume, by the way, brother. Yeah, hope everything's going well in the meantime. But yeah, alright guys, I'll end the stream here. I just wanted to do a quick one because I know I've not been very active this week. I've been really busy, like I said, but just in case there was anyone a bit worried here, or a bit confused about what they should be doing, right? Just a reassurance that just stick to your risk management, right? Especially if you finished core, you guys have all the tools at your disposal to be able to trade this. Okay, just have faith in yourself. So yeah, I'll stop this recording here. Send